Welcome, Welcome back, dear traders. Let's evaluate the red-hot macroeconomic data from the United States and try to revise our forecast of popular trading instruments. Wall Street opened on an optimistic note on Monday, extending gains over Friday. The benchmark stock indexes closed in the confidence. However, the market is on a track to resume its losing streak today. Major Wall Street indexes rose for the fourth session straight. The Dow Jones closed 0.71% up, the Nasdaq gained 1.27%, and the S&P 500 grew 1.06%. to close at 4,110 points. The key stock indexes traded in the green in the New York pre-market. However, all three indexes collapsed 1.5 and 2.6%, following the U.S. inflation data. The S&P 500 is expected to trade in the intraday corridor between 3,960 and 4,070 points. American stock indexes closed with notable gains on a Monday. 11 sectors in the S&P 500 rose, with the high-tech and the energy stocks taking the lead. Apple stock climbed almost 4% as Wall Street analysts indicated robust preliminary orders of a new series of iPhone 14 and the Apple Watch. New gadgets will be available from Friday. Inflation expectations of the U.S. households went down in August because of a sharp drop in gas prices. According to the survey of consumer expectations published by the Federal Reserve Bank of New York on a Monday, showed that households projected inflation at 5.7% in a year ahead versus 6.2% predicted in June. The survey was released before the report from the U.S. Labor Department, and the stock market cherished a hope, but the official CPI reckoned fragile optimism. The annual pace of consumer inflation in the United States eased for a second month in a row. The annual CPI slipped to 8.3% in August, following 8.5% in July. It's the lowest score for the last 3 months, but above the consensus for a deeper decline to 8.1%. Energy prices surged to 23.8% from 32.9% a month ago, amid a considerable drop in petrol and fuel oil, whereas gas prices leapt and electricity prices spiked 15.8%, the highest reading since August 1981. Besides, prices of food, houses, second-hand cars and trucks accelerated last month. Headline inflation showed a 0.1% uptick on a month, defying the forecast for a 0.15% downtick. The core CPI, excluding volatile food and energy prices, rose to 6.3% on a yearly basis in August. It's the strongest index since March, surpassing 5.9% in the previous months and the consensus of 6.1%. Obviously, the stock market has halted its rally. Investors believe that the US Fed is unlikely to give up its aggressive monetary policy. Following the CPI data, the market is betting on a sharp rate hike later this month. There is a 79% chance for a rate hike by 75 basis points, and also a 21% chance of a jumbo rate hike by 100 basis points in late September. In this context, it's hard to predict a rally in particular sectors of the stock market. The stocks of companies with mega capitalization, such as Apple, Tesla, Microsoft, Amazon, and Meta, lost in the pre-market, which enables us to judge on the overall market sentiment. Traders have revised their sentiment in the currency market. The US dollar is celebrating its triumph today, tightening its grip on all major currencies, and the US dollar index sank 0.7% intraday, but it spiked in light of the news pushing its rival currencies abruptly down. The index regained 0.97% by the moment of recording this video, trading at the elevated level of 109.37. The intraday corridor is defined between 108.90 and 109.70. In the morning, the US dollar index shed 2% in the last 4 sessions and sank more than 2.7% from its 20-year peak conquered last week. Earlier today, the euro hit a 1-month high against the greenback, and even the yen showed signs of some consolidation. The report by the US Labor Department landed a punch of risky assets. The inflation fell short of expectations of a slowdown, and thus reviving the risk of mood and the faith in the Fed's extreme hawkishness. While the US dollar is advancing across the board, the euro again slipped to the parity level, having lost 1.06%. The pound sterling and the yen also tumbled 1.20% each. Traders could change their sentiment after the first response once they digest the inflation data and estimate prospects. For the time being, the greenback is flexing its muscles. The Canadian dollar is given in to the strong American rival. The USDCAD pair grew 0.69%, and it's expected to trade in the corridor between 1.3010 and 1.3140 today. The loonie has no chance for recovery due to the rapid US dollar's rally. Previously, the Canadian dollar asserted strength for a few days amid rising oil prices. Nevertheless, the loonie found some support from oil prices intraday. Notably, the total pessimism about popular assets also spread across the oil market. Oil prices rose about 1% earlier today, but they reversed down in the New York pre-market. Brent crude futures shed 0.05% to trade at $93.88 a barrel, and WTI futures grew 0.63% to trade at $88.28 a barrel. As for the crypto market, Bitcoin slumped 5.06% to $21,270. The crypto is vulnerable to the greenback's strength, so the opposite correlation to the US dollar index is to blame again. The number one token pushed popular cryptocurrencies down. Ethereum, Solana and Luna sank 6 or 11%. Litecoin is the only top crypto which printed gains. The outlook for Bitcoin is obscure. Ethereum could benefit from the pending merger, but the flagship crypto does not have fundamentals to grow. The token might drop below 20,000 in a few days. The intraday corridor for Bitcoin is defined between $20,800 and $21,700. Beware of high volatility across financial markets today. Make prudent trading decisions with the InstaForex, and see you tomorrow.